Good morning, good evening, good afternoon, everyone. It's V, the Guerrilla Economist, and we have Dex, and it's time for the Daily 10. Frank will be joining us at any point during the broadcast, so until then, it's the Daily 10, where we bring you the market news and economic views important to you. Dex, what's going on, buddy?
What up, my main man? Uh, Another day in these markets. What can you say?
Yeah, absolutely, bro. Lots of things moving, lots of things shaking. Where do you want to begin?
Well, let's start with what's happening with the news that's affecting these markets. As you know, there's still a lot of issues going on with different various sectors in the market, especially retail, really just getting destroyed right now. Tesla right now is still
Yeah.
falling off of a cliff, down almost $7 as we speak. It broke below 200,
Wow.
so we're in the 190s now. Man, it's looking really nasty. Gold is catching a slight bid because of the downturn in the stock market today. Right now, gold's up $2.30 at 1275 half, and the Dow futures just broke down now, down 109. And the NASDAQ is down 38. When I say NASDAQ, I mean the NASDAQ 100 futures contract. So it is negative right now. Basically, what you're seeing is what we talked about yesterday, that I believe that yesterday's rally was setting up for the next leg down for today. And that's exactly what you see happening. You see the market headed back lower today. I think this is the beginning of a real correction, especially if we take out last week's lows and close there this week. So we just need to close below last week's low, and then that will seal the deal, and that will begin the stock market correction.
Yeah.
How much can we correct? You don't even want to know. It's bigger than anyone could ever expect. I've been warning that for a minute now, that once this thing corrects, it's going to be scary. It's going to frighten a lot of people. But I do believe that depending on how the Fed moves will determine how deep the correction will go. And what I mean by that is, if the Fed does not touch those rates and they leave those rates alone, then there's a strong possibility, believe it or not, that the correction will not be as deep. However, if the Fed meddles and starts raising those interest rates, then it will accelerate the corrective downturn in the equity market. And it could be very shocking. It could take out some very, 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 very difficult lows, especially in the Dow, taking us all the way back to guess where? Possibly the December lows.
Interesting.
So you're talking about a 3,000 point drop in the Dow, which is possible if the Fed touches those interest rates.
Yeah, there's also talk that the Fed might cut interest rates, man. What do you think about that?
Yeah,
It's circling the rumor mills.
Yeah, but then we're flirting dangerously with negative interest rates at that point.
Yes, we
We're
are
already basically at zero. I mean, goodness. Once you're at 2%, you're already at a very dangerous precedent. And when you start lowering it back down, flirting with zero, the only place you can go is negative at that point.
Yeah.
And I don't think the Fed wants that on their history books, that they took us to negative interest rates. So at this point, I don't think they should do anything. And I don't think they really can do anything. The rumors also suggest that if the market does really start to seriously correct here, that they will come in and raise the rates. For people out there who don't get it, let me break it down for you. Fed raising rates equals bear market. Fed's lowering rates equals bull market. It's just how it is, folks. It's just how it works. It does take up to 18 months for the effects of a FOMC Fed rate raise or cut to really trickle into the economy and into the overall stock market. So you're looking at the handwriting on the wall that if they raise those rates, then between now and the next 18 months, you could see just thousands of points being shaved off that Dow. Mm-hmm. If they lower the rates, like I said, it will put a floor to the correction and actually cause the market to possibly rally throughout the summer.
Yeah, I heard there could be a 25 basis point cut possible.
Yeah, that's what they're saying. They were looking at the Fed fund futures and saying that, some like 80% chance or something like that of them doing that. I don't know. They could always surprise. It is not outside of the historical norms for the Fed to actually do a surprise. Mm-hmm. They've done it before. They've done it many times before. So it can be done. Even in between meetings, they've been known to do things with the interest rates. So it's just something to watch and to be noted what's happening. Another thing that's really important is this strong dollar. Now, we talked about this yesterday with the dollar, breaking above 98. Yeah. And it's staying there right now. It's staying there. And that's weighing and putting pressure on the euro, which is down today. It's just slightly off 3 pips, but it's at that 111 handle. All right. It did break over 112.04. It hit that, slightly here. Looking at, speaking of the futures, the euro futures, we hit 112.04 and then pulled back to 111.80. So still some pressure. Market hasn't really been able to stay above 112. Speaking of that euro, it also should be noted that the pound is hovering at 126.76, having problems, remaining above 127, 128. So I think that the more uncertainty there is with the whole Brexit thing, I still personally believe that it's never going to happen. But as long as that's there on the table, the pound is also going to continue to be under some pressure. And that's just where we are. That's the overall landscape that we have right now with them. As far as Bitcoin is concerned, today Bitcoin is giving back a little. It's down $157.50 right now at the 7,900 level. We did hit 77.90, in the overnight market. And today it should be noted that according to the 2-bar Charlie methodology, today in the Bitcoin futures contract, ticker XB as in boy, T as in Tom, we have an all-day down day or a negative 2-bar Charlie day. So for those of you who are in the trading room, you know what I'm talking about. Those of you who are maybe new and not familiar with that, check out the tutorial on the 2-bar Charlie, and you'll see what we're talking about. We also mentioned it, I think, in the last tutorial that we did. I forget the name of it, but whatever the latest one is on there.
The free money one.
Free money. There you go.
There he is.
I think we talked about it.
I've been sitting here quiet for a while.
What up, dude? Yeah, so also getting back to the bonds. This week I was looking to operate in gold and the bonds as well as the NASDAQ.
Gold bond? Isn't that a lotion?
I know, right? But I've held off. I have not pulled the trigger on those two just yet. And one of the reasons is because those two markets have kind of been in a sideways flux. Can't really decide what it wants to do, where it wants to go. So I've been holding off to see exactly what kind of traction we may or may not get in those. I will be advising in the room once I made that final decision, once I see where the market may be heading. And right now it's still too weak for me. I don't trust the momentum in those two. And what we're talking about ticker wise is ticker T as in Tom, L as in Larry, T as in Tom. So TLT for the bonds and ticker GLD for the gold. And right now, neither one of those markets are really meeting my criterion for the day for me to pull the trigger. So like I said, I'm going to wait and see right now. It should be noted, though, that TLT is getting a little bit stronger as we're talking here. It broke 126 now, broke above 126. So we might have a momentum run here. So I might have to consider where I want to possibly get involved. For those that are looking, following along with me with the sheets, I'm looking at the TRS today to get long on the TLT. If the market can move a certain way and trigger that TRS, then that's where I'll probably end up getting in on the TLT.
Very good.
So
yeah, that's for people in the room. The TRS is one of the secondary entry points. It's on the advanced sheet.
correct.
That's what you're looking at.
Correct. And if that's triggered, that usually means that the market is really ready to run in that direction. So keep an eye out on that TRS, folks, because I think that's where the market probably wants to head right now. So like I said, I got my eye on it. I'm watching it. I don't have an order working just yet. I just want to see how the bonds move. I want to see, is Trump going to come out and speak once again today? It's like every time the market takes a downturn, he comes out, has a press conference talking about everything but the market, but it's enough to make the markets rally and reverse course. So we'll see if that's a wash, rinse, repeat today or not. But that's kind of been the cycle so far over the last, I want to say, 6 trading sessions.
Very good, man. Very good. Frank, last but not least, man, go ahead and give out that webinar. We have a webinar this Wednesday. Go for it, Frank.
Friday, yeah, this Friday.
Friday.
Link will be in the description if it's not already. And we're doing our PulseWave trading for beginners. We basically, this is a good one. We've done a lot of different themes in webinars, but this beginners one seems to flow really, really well. So whether you're interested in trading equities, futures, Forex, cryptocurrencies, we trade it all. So we'll show you exactly how we do it. We have a thing called the PulseWave Price Triggers, and those are published every weekday evening. And they show you what is very likely to happen in the market. They show you how to get in when that action is confirmed.
Perfect.
And so you can place your orders and get ready and watch the market move. So this Friday, 1 p.m., we have our PulseWave trading for beginners. And there's a link in the description. You just got to register. And 1 p.m., me, Dex, V, and a bunch of other fun people will be on there to talk about how to trade the PulseWaves. Pretty fun thing we do every week.
Awesome. All right, folks, join us all on Friday. And again, we'll be back tomorrow with the Daily 10. Have a great day. Cheers.